Hi, everyone. Thank you for tuning in. My name is Teresa Bailey, and I'm a wealth strategist with Waddell and Associates. Last year for EO Nashville, we gave a lunch and learn last summer on recession 2020 and preparing for what might come. Now that recession 2020 has landed, we wanted to provide each of you an update on what you might want to do given the current market conditions. So with that, I will hand it over to David Waddell, who will enlighten us all on the action steps we may want to take now.
Hey guys, hopefully you had an opportunity to click on the other link that should have accompanied this link that will open up a Pandora's box of information related to the health concerns around the coronavirus, the economic concerns and the macro economy, and then also what's going on in the market, what we think is going to happen. So we've updated that presentation from when I talked to you all yesterday. And so there's a little bit more detail there, something we did for our clients and friends that we're giving you exclusive access to. So what I want to do is reprise the discussion that we had around the micro consequences of what's going on. We are in a recession. I think at this point, it is a hard stop. We had talked a year ago at the Palm restaurant about what to do prior to a potential recession in 2020. I certainly didn't predict that we'd have some sort of global pandemic, but just from a timing perspective and where we were in the cycle, it was something to just consider as we start reducing risk levels in our business and preparing for the winter that always comes. So is the nature of economic cycles. So I'm going to update a little bit some of that discussion and give you some thoughts and some talking points to digest while you're trying to navigate through this storm. All right. So to answer the question, yes, Nashville has recessions. Yes, Nashville dealt with a recession in 2000, 2008. The actual per capita GDP in Nashville, which is economic output per person, did decline in real terms by about 9%. Go ahead and add inflation back, which is about 3%. And on average, economic activity declined by about 12% in nominal terms. So you've dealt with recessions before. Nashville was quick to snap back. I imagine that'll be the case this go round. What that means for your business specifically, this is a great chart. This shows you what revenues do inside the S&P 500 during a recession. The drawdown in 2008 was obviously extreme. It was quick. That's potentially a good analog for what we're going to see here. So we're all small business owners, and that makes this so much more acute. But for large businesses during that period, sales did fall 19.9%. So it was a 20% drawdown in revenue. So if we use that as a template, certainly you could expect that, if not more. It depends on the industry you're in. If you're in restaurants, hospitality, event planning, anything that's consumer discretionary oriented, obviously those industries are going to be hit harder. If you're in home health care or hospital service, you might actually see a benefit. I know you don't want to, but that's just the way that the economics work. And so for the purposes of this, if you look at the estimates on the US economy, at least near term, or from what we've seen out of China, it could be a drawdown of 25% quarter over quarter while everybody goes into quarantine. So that's what we sort of have to consider as we game plan through it. Now, we told you pre-recession that if you had an illiquid asset, a business or a property, go ahead and sell it, right? Just start de-risking your illiquid portfolio. We did walk a bunch of people through selling their businesses in the last 2-3 years. I feel really good about that. Valuations were at an all-time high. If you missed that window, I'm sorry, but it will open again. It may take a little while, certainly to get back to those valuations. If you don't have to sell a property right now in a vacuum of demand, then I would suggest not doing it. So the better course of action is to figure out how to survive. If you have liquid assets at the time, we told you, trim some risk. And if you don't want to do it yourself, you're welcome to hire us. We'd love to have you in the family, and we can do it for you. So now here we are in the recession. So now instead of being a seller, it's too late for that. Now you got to be a buyer. So if you have liquid assets, right, if you have cash that isn't emergency cash to sustain your family or the business, if you have securities, you have an excess weighting towards bonds, for instance, then this is a good time to add some risk. If you're curious about how to do that and you want to do it prudently and in the right places, you can always call us. Be happy to help you with that. On the illiquid side, for those of you considering using this moment as an opportunity to buy a business or buy a piece of property, my advice on that would be give it a little time, right? Takes a little time for distress in the real property markets to hit the tape. In the liquid world of security prices, it's almost immediate. You got computers, you got investment houses, you got people press and sell with just clicks of the mouse. It doesn't work that way in real property. It takes a little while for the pain to drive down the prices. So be alert, but I don't think it's time yet to go purchase anything. We had talked about a good strategy going into recession is to raise your prices. Hopefully some of you did that. At this point, it's too late for that. You can't do that now. We had talked about delaying big ticket item purchases. I think this is still prudent, keeping inventories light, keeping short receivables. Let me go ahead and update this for you to where we are now. It's a good time to hoard cash, right? The way you do that is shut down any big spending projects, tap your lines of credit. If you don't have a line of credit, the banks are still willing to provide them. Go activate one and then draw down a portion of it so they can't take it away from you. So if you don't have a line of credit and you need one, let's say you go activate a $500,000 credit line, I would go ahead, activate it and pull some down to make sure, like I said, they can't take away. Pull five, if it's a $500 line, take 100 down, take 200 down, take whatever you want to just to make sure they won't pull it. The other thing, and I hate to say this, but if you can't pay the rent, don't pay the rent. So ride your suppliers a little bit. It's pain. It gets shifted around. I'm somebody who likes to keep current accounts, and so that's a practice I abhor because obviously we're all entrepreneurs, and you don't want to, not provide revenue for somebody else, but you got to put your oxygen mask on first before you hand yours off. So if you can ride your suppliers, get favorable terms, deal with them later, you want to do that. Like I said before, I think it's a little too early to go shopping for illiquid assets, but that is a strategy if you've got cash that can yield great returns. So be looking at the purchases you're considering, monitor property prices. If you even want to put in a low bid to see if they'll hit it, maybe they need liquidity, then go ahead and do that. But it's a little too soon, I think, to jump on buying a business or real estate. Delaying capital intensive projects, obviously that's a natural instinct during this time. I think it's correct. One thing you can do is consider locking in favorable long-term contracts. I noted this morning that the price of gasoline in many places has dropped below $1 a barrel. And I thought, man, can I go get like a tanker truck and load it up with gasoline under $1 and just sit it outside of my house so that I have a great reservoir at a really low price? Obviously, that doesn't make sense. But if you can lock in favorable long-term rates while somebody else might be in distress, or at least you have more negotiating power, then maybe you can get the rent down, you lock it in for 5 years, whatever the case may be. So if you've got the wherewithal to commit to long-term contracts, you can get more favorable terms right now as we are in recession. Optimize operations. Look, it is no fun to be a business owner and have to let people go. It's so easy. I remember sitting in the business school pits and you get these case studies and the market would move against a company and be like, well, you just trim 25% of the staff. Well, then you grow up and you know their names and you know their families, and this becomes a very difficult thing to do. I get that. But it may just be something you need to do. So you got to prioritize to a certain extent who can stay, who can go. One of the things you can do, never take a crisis for granted, is restructure perhaps the way that you do compensate your employees. Maybe you move them to more variable comp and away from fixed comp. Variable comp becomes an automatic stabilizer within your business, whereas fixed comp obviously is just a fixed liability and can be very difficult as revenues go down, squeezing margins and maybe even tipping you into a cash flow negative situation. So employees will be happy maybe that you're not letting them go, but that you are taking a half step to restructure their compensation. Now might be a good time to consider redoing compensation plans if that's something you considered in the past. Obviously, what can you stop doing? There are certain things that we have been doing, buying lunches and things like that to try and boost morale. But we probably won't load everybody up on a plane and take them somewhere. So we don't do that really anyway, as far as those kind of big trips. But if there are things that your company has on the books that are big sources of cash outflow and they're not mission critical, obviously cut those, because you need to have a 12-month cash plan. So I think about that in four different stages. One, what's the cash on hand? If you husband all the resources, what does that really look like? Two, what's on your line? My suggestion is you draw that all down, maybe not dip into it, but have it as a reserve. And then can you refinance? Interest rates are down at historic low levels. This makes an excellent time to refinance those obligations if you've got them out there. Pulling an interest rate down from 6% to 4% unlocks a lot of cash, and you need cash. And then what's the stimulus on offer? This is complicated. So far, there is one bill that's been signed. I think Trump signed it at 10 o'clock last night or maybe the night before. This bill, the first bill, was really oriented towards the employee, not the employer. This is information on that bill. This is the best grid we've been able to locate so far. I'm not really deep in the details. I am somewhat familiar. But if you have an employee who says, I have the coronavirus, and they go away, there is a relief package for the employers. You continue paying them, and then you get a tax credit up to $511 a day, I think. I hope it's in that grid somewhere. Point is, there's a lot of detail on this still rolling off the presses, but there is relief if you've got an employee that had to go home on sick leave, or you got an employee that's got to be home with the kids. We're moving into sort of a mandatory quarantine phase anyway. These things are on offer. We do have intelligence at WNA. I'm trying to make sure that we're experts in this because it's important to our small business owner clients. And so if you have specific questions on these, go ahead and give us a call. Happy to share the information. Hopefully you paused if you want to take some time and read through the bullet points. They're pretty good. But again, a lot of this detail is coming out. There is a secondary stimulus plan in development. Hopefully, as you understood viewing the first presentation, we're going to have a gap in the economy. Might be $1 trillion, could be up to $2 trillion. There will be stimulus from Washington to fill that gap. Some of that will be mailbox money. You'll receive checks in the mail. Some of that, if you're Boeing or United Airways, will be a big bailout package, terms and conditions to be decided later. For the small business owner, what is encouraging that they are working on is if you're having trouble because you got no revenue, keeping people on payroll, you go to the bank. It's an accelerated underwriting process. You say, my payroll is $1 million. I need $1 million. Bank says, okay, sign these forms. You have a line of credit that you can draw against. You pay your employees out of it. And then at some point in time, when we're on the other side of this, your obligation to pay that loan back could be under very favorable terms, or it could be completely forgiven, as Marco Rubio has suggested. So I don't know where that goes, but there is another supply of cash, which is a credit line specifically for your payroll, terms and conditions yet to be determined. But that's one of the things that they're working on. Lastly, in moments of crisis, be fearless, right? The natural posture is to sort of be on your heels. I've already had some conversations with people in EO who have done these dramatic pivots in their business models and have provided at a price, an offer, or a service to the marketplace necessary in times of distress. It's just astounding how nimble and resilient entrepreneurs are in general. But for those of you who are in strong positions in your current business model, consider using the financial strength that you have to offer perhaps one-time discounts, pull in some market share. Consider buying companies in duress. We are acquisitive right now. It's been very difficult to get smaller financial advisors interested in perhaps selling their practice to Waddell and Associates because times were so good. Why would you ever sell? Well, when times get bad, you realize, gosh, this business isn't nearly as much fun as I thought it was going to be. And so it may unlock opportunities for us, and we're in a strong financial position. So if you know anybody, reach out to us. There's also an opportunity to poach all-stars if there are people that you've been, sort of pining for from afar, hoping, to have them on your team one day. Maybe if you have a sturdier ship than the one they're on, they'll be interested in joining your crew. So consider, taking some potential all-stars if they're out there in the marketplace. And I think increasing marketing and communications, and especially leveraging technology, and Teresa and the team that we've got have done an amazing job of sort of getting these videos available to those who might benefit from them. So be fearless, communicate, talk to people. The internet, a lot of emails go around, calls are better, but it's a great time to initiate communications. People will remember that when they look back on the crisis, that you weren't hiding, you were out in front of it. With that, I'm going to close. We are here as a resource for all of you. I am also an entrepreneur. This is also a small business. I am completely sympathetic to what you all are going through. The most important thing is for you all to be healthy. The antidote to this virus, absent a vaccine, absent an antidote, is the social isolation that we're all feeling. But a recession is the antidote to the virus. That is what's going to occur in Q2 2020. I think the snapback will be relatively quick. So figure out ways to endure. Call us if you need help. And with that, I just implore that you wash your hands and take care.
Thank you, David. That, as always, was wonderful information. Great job being the fog cutter that we rely on here at Waddell & Associates to dig through massive amounts of data and really cut it down to the bottom line on what everyone needs to do. Thank each of you for joining us. If you have stumbled upon this and you were not part of the original conference call, you can text EO webinar in all caps to 44222. That will then ask you for your email address, and you will be opted into an email distribution list where we will be providing updates as we have them. Again, thank you for joining us. My name is Teresa Bailey. I'm a wealth strategist with our office in Brentwood. We're here for you guys during this time. Small business owners have been greatly impacted. Please opt into the email list. You can also find my contact information on our website. Everyone be safe, stay healthy, and lean on us when you need it.